the International Tax Review does.
So International Tax Review is a magazine that looks at tax policy across the world, primarily for corporates. And we have quite a big focus on corporates who are not quite paying their fair share and might be using some rather inventive techniques to get away from paying their fair share.
Well, I mean, look, I mean, this Bill Gates is a very, very rich man, and he's made that money himself, creating something that we all use every day. All credit to him. He's also basically set that trend that, if you're a multi-billionaire, basically the classy thing to do now is plan to give away all your money. He's done amazing work with the Bill and Melinda Gates Foundation. I mean, just absolutely brilliant work, literally saving millions of lives in Africa, and all credit to him for that. But do you, at the International Tax Review, do you have some issues about where this money has come from?
Well, first of all, I mean, utter applause for Bill Gates and Warren Buffett and people like him, who, they're fabulously wealthy individuals who are giving a lot of money away to very good causes, and that should absolutely be applauded. No question about it. I mean, $4.6 billion, that's more than you, I, or anyone we ever know will ever earn in our lifetime at a stroke of a pen, given to help poor people in developing countries. But it is important to point out that tax avoidance, tax evasion, tax dodging, developing countries lose more to avoidance and evasion than they receive in aid, which is phenomenal when you think about it. And Christian Aid put out a report in which they estimated that tax dodging cost the lives of 1,000 children a day in developing countries. So, I mean, it is absolutely vital that corporates pay their fair share of tax, and individuals too. And then, if we want to look at charity on top of that, then that's important too. But tax paying is it saves lives, tax paying.
Yeah, but this is the issue, isn't it? And we've seen this has been issues with Mark Zuckerberg, the founder of Facebook, again another multi-billionaire company, and he's talked about he's going to, over his lifetime, after the birth of his daughter, he was going to start handing over his wealth, 1% sort of effectively, 1 or 2% at a time. And you think, well, that's wonderful and everything, but again, another company that is constantly criticised for it's perceived as not paying its fair share. Now, totally legal. No one's breaking the law, but not perceived to sort of, I suppose, complying with the spirit of tax law. Tell us, particularly in the situation with Google, what the issues regarding their, totally legal tax arrangements are.
I mean, there's so many different techniques by which multinational corporations can dodge taxes. I won't go into the specifics of one particular company. I don't think that would be particularly fair. But you can just look. I mean, transfer mispricing is one of the most common techniques by which companies will avoid taxes. They will do trades between different entities of the same company between different countries and overprice and pretend they're making all their profits in a low tax jurisdiction, whilst actually they are in reality making most of their profits in higher tax jurisdictions.
So they basically charge themselves a lot of money for providing a service to themselves, and then so any of the profit that is made, the profit is, as you say, it's in the country which happens to have the lowest corporation tax rate.
Yeah, look at the Cayman Islands. There are more registered companies in the Cayman Islands than there are people. I mean, I don't know how many.
They're a busy group of people, aren't they?
Yeah, very industriously residents of the Cayman Islands. But that's an example of how companies can do this sort of thing. It's every day. It is being addressed by the OECD and the EU. And governments around the world are beginning to crack down on this, and there are all sorts of transparency initiatives because sunlight is the best disinfectant, and it's important. It is important to recognise that if governments allow it, then companies will do it. So governments are recognising that they need to close the loopholes and hold companies to account.
But as you say, whether it's in a country like Britain or in America, that it will be a net, contributor to developing countries in terms of aid, or it's paying taxes in, as you say, these developing nations that are desperately in need of help and may actually be recipients of these donations, these charitable donations. You could actually, arguably, if you paid the tax rate, these countries would be, that people expect. These countries would be doing better. There is, though, the alternative argument that a lot of people might think, and I've got to be honest with you, I'm borderline in this category. Is actually, my guess is Bill Gates, through his foundation, spends his money in terms of his charitable money rather more wisely than most governments do.
I mean, that is an argument to be made. I would say that, governments are democratically elected. We might despise the government in office at the moment, or we might love it. We might not want our tax money being paid for certain things. I, for one, do not want my tax money being spent on bombs to invade Iraq or something like that. However, that's not my decision to unilaterally make. I like the fact my tax money goes to pay for the NHS and so that everyone can have free healthcare. But again, not my decision to make. So I don't think people can voluntarily opt out of
Yes.
paying tax and say this is how I think it should be done better, because we live in a democracy and we have to decide
Yeah.
as a society how it's best
But
divvied up.
the issue here, really, although the companies, naming no names, the companies which do this sort of transfer pricing, and they, as you say, they're just taking advantage of the laws that are there. It's our democratically elected governments that are responsible for dealing with this. Is it the case, though, that there are companies, whether it's the likes of Microsoft, whether it's Google, whether it's Starbucks, whether it's Facebook, whatever it is, that actually Amazon, like that they are bigger, they are more powerful, they are richer than some world economies, and actually they do get to make their own rules.
The governments are fighting, an uphill struggle, and it's partly because they can hire. The companies can hire armies of accountants and lawyers to, even if the governments close the loopholes, these accountants and lawyers are paid to find new loopholes. So it really is about staying one step ahead. The other problem that you find is that often the people who work for the big four firms, they've been trained at HMRC. They know the rules already because they invented the rules, and then they get poached and paid vastly more to work for the Magic Circle law firms and the big four accountancy firms. So it's a revolving door, and with gamekeepers turned poachers and whatnot, as Margaret Hodge would have put it.
We've absolutely
problem.
seen that here, haven't we? That they actually get seconded from these major accountancy firms into the Treasury, into HMRC. They work on policy, and then they go back huge amounts of money into the private sector and say, "Oh yeah, and here's the loophole we left in."
Yep.
I mean, it's just extraordinary.
Yeah.
What do we do about that?
Well, I think we are pursuing the right approach at the moment, which is going via the OECD and the EU, which have brought in country-by-country reporting, which means companies are now beginning to have to declare exactly the profits made and the taxes paid in each country, rather than as an amalgamated group basis, which means governments can now see if there's a problem. And that's going to lead to a lot more litigation. And my advice to companies, and corporates are the primary readers of international tax review, my advice to them would be to play by the rules and get ahead of the curve, because you don't want to find yourself caught out later down the line and slapped with a massive fine and interest on top of the tax paid.
But that said, there's the idea that the EU are going to deal with this. I mean, Jean-Claude Juncker, remember, President of the European Commission, one of the the powers in the EU. This is a man who used to be Prime Minister of Luxembourg, and before that he was Minister for Finance. And one of the things that he did while he was running that country, for a heck of a long time, he was running that, best part of 20 years, for God's sake, that he basically made Luxembourg, a low tax economy. It basically made it, for all intents and purposes, a tax haven. I mean, this is a man whose own past would suggest to you that he's not going to be tackling big business on tax rates.
Well, I was, I was concerned about his appointment as well, and it's very rare that I agree with David Cameron on anything. But yes, there were some warning signs were flashing when that happened. But so far it seems like the EU is doing a relatively good job, and it's not just one man. And I mean, we're going through Brexit now. Britain's leaving the EU. But one thing I would say in favour of the EU is that there are very few institutions out there in the world that are capable of getting ahead of companies, because companies operate across borders. Single nations alone find it very difficult to regulate companies, and you need that kind of cooperation across borders between nation states.
But again, you don't need to be in a political union to do that. Thank you for joining us, Salman.